Ladies and gentlemen, welcome back to Vietnam Stock Market Entry. I am so happy and grateful to all of you guys to follow our channel. And if you want to open a legal trading account, please contact us with Vietnamstockmarket.entry@gmail.com. Telegram, Vietnam Stock Market Updates, with the phone number is +84914326556. Or you can also scan the QR code on the screen so that we can support you. Or you can follow and subscribe the other channel is Areca Capital channel. The owner of this YouTube channel is Areca Hong Yuan. She is a personal financial advisor and a Viet Capital Security stockbroker manager. You can contact her with the email hong.nguyen@vcsc.com.vn. With the phone number is 84914326556. We always welcome you to our office on the 11th floor, 109 Trần Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And today, I would like to introduce to you about one enterprise that has the industry is banking. Can you guess? That is Techcombank, TCB. Incorporated in 1993, Techcombank is the fifth largest bank in our coverage universe, as calculated by total assets. However, it ranks second in terms of absolute net income in 2021. TCB's mortgages loans is among the highest in the sector. The bank listed shares in June 2018. Revision of corporate bond regulations casts shadow. We cut our target price for TCB by 8.2% to 64,100 Vietnam dong per share, but maintain our buy rating. Our lower target price is mainly driven by a lower valuation produced by both the residual income and target PB approaches, that is derived from, firstly, a 2.7% aggregate decrease in our projections for 2022 to 2026 forward net profit after tax MI, and secondly, an increase in our in-house cost of equity from 12.5% to 13%. We decrease our 2022 forward net profits after tax MI by 2.6% to 21.7 trillion Vietnam dong, 944 million US dollar, plus 20.3% year-over-year, compares to our previous forecast as a result of 1. A 2.8% decrease in net interest income following a 7 PB cut in NIM and a downward revision in our credit growth assumption from 22.8% to 17.7%, with the main cut focus on the corporate bond balance, and 2. A 2.9% decrease in here, and FI due to cuts in fees from the underwriting business and securities brokerage, which are partly offset by a 23.9% decrease in provision expenses. We cut our average 2022 to 2024 forward. credit rose from 20% to 18.4%. Having said that, 18% credit growth (PA) remains high compared to expected system-wide credit growth of 14% to 15% PA. Downside risks to our positive view: lower than expected credit quota, failure to maintain CASA ratio at our expectation, higher than expectation NPLs arising from loans and corporate bonds. Techcombank raised $1 billion of syndicated offshore loans in June 2022, which will help the bank to maintain its low funding cost average advantage while CASA could drop in the short term. This is the third time that Techcombank has utilized offshore syndicated loan, which reforms our view that Techcombank is well positioned to maintain the lowest COF in our coverage universe. This source of funding also lowers Techcombank's pressure to offer high deposit rates to compete with other banks is in attracting deposits from customers. Meanwhile, there was a 3 PPT Q-of-Q draft in Q2 2022. CASA ratio that the bank explained could have derived from one, a shift to other assets by customer as the economy recovers, and two, the time credit quota triggering customers to use their own money for spending businesses. We believe the State Bank of Vietnam's conservativeness to provide credit quota top up this year and the raising interest rate environment could make it difficult to increase the CASA ratio. Therefore, we cut our 2022 forward CASA ratio by 2 PPTs to 49%. All eyes are on the supplement and amendment to Decree 153. The changes in Decree 153 will have outside importance to Techcombank given its large exposure to corporate bonds in both investments and fee income. The new draft of Decree 153 released in July seems to loosen some restrictions for bond issuers compared to the previous draft in May. However, we believe there will be further revisions before the final version is approved by the Prime Minister. Our current assumption and expectation is for the final version to be promulgated by the end of this year. Under this scenario, we believe that Techcombank's underwriting business could remain stagnant in H2 2022, as seen in Q2 2022, while the stricter rules for the bond market could cause a negative short-term impact on the supply side. We believe it is necessary for the long-term development of this important funding channel. We view Techcombank as an attractive long-term investment based on our forecast. Techcombank is trading at a 2022 forward PB of 1.18 times compares to the peer median of 1.31 times with 2022 forward ROE of 21.1% compares to the peer median of 22.2%. We move to the H1 2022 recap. Provisions expense track behind forecast. Net interest income H1 2021 12,708. H1 2022 15,905. Year of year 25.2%. Percent of 2022 forward old 47.1%. VCSC comments. H1 2022 net interest income increased 25.2% year over year, thanks to, firstly, a 1 pp year over year increase in NIM to 5.82%, which was mainly derived from a 7 pp year over year increase in the IEA yield that outweighed a 4 bp year over year increase in COF, and secondly, an increase in regulated LDR from 76.6% in Q2 2021 to 78.8%. 6 months 2022 credit growth was 7.56%, which were close to the bank's initial credit quota of around 9%. 6 months 2022 deposit growth was slow at 2.2%, but pressure to increase deposit growth in H2 2022 is moderate, partly thanks to the US to $1 billion of offshore syndicated loans recently raised. Net fee income and FI H1 2021 2,948. H1 2022 3,871. Year of year 31,303%. Percent of 2022 forward old 47.9%. Q1 2022 NFI was mainly driven by strong year-over-year growth in brokerage services and underwriting, while there was a negative impact on weak income from bancassurance. The opposite trend was witnessed in Q2 2022. H1 2022 year NFI grew 39.1% year over year to 3.9 trillion Vietnam dong, following firstly a 60.7% year over year increase in net fees from banking services. Secondly, 37.2% year over year increase in net fees from underwriting securities. Thirdly, 70% year over year increase in income from the securities brokerage service. And fourthly, 31.5% increase in income from bancassurance. Techcombank reported a minimal gain from FX trading of 1 billion Vietnam dong in H1 2022 compares to 166 billion Vietnam dong in H1 2021. Total non-interest income H1 2021 5,430. H1 2022 5,243. Year-over-year minus 3.4%. VCSC comments. Net gains from trading and investment securities dropped from 1.4 trillion Vietnam dong in H1 2021 to 127 billion Vietnam dong in H1 2022, part of which was due to higher provision expenses for bond evaluation, while circular 24 2022 that came into effect in May 2022 no longer requires banks to book provisions for the valuations in government bonds. Techcombank did not make any provisionings reversals for this category in Q2 2022. H1 2022 net other incomes increased 11% year-over-year, in which recovery income from return of bad debts rose 19.1%. Provision expenses. We attribute the year-over-year drop in H1 2022 provisions expenses to a decline in restructured loans in the last 6 months, which facilitate the reversal of provision expenses booked for restructured loans last year. Net profit after tax MI H1 2021 9,108. H1 2022 11,305. CASA ratio Q2 2022 CASA ratio increased 1.4 ppts year-over-year, but decreased 2.9 ppts Q-over-Q. Techcombank shared that the Q-over-Q drop in CASA could be explained by 1. The shift to other assets by customer as the economy recovers, and 2. The tight credit quota triggering customers to use their own money for spending businesses. Loan growth. Techcombank took actions to reduce its corporate bond balance in Q2 2022, which helped to credit room for loan growth. 6 months 2022, loan growth was mainly driven by the retail segment, plus 26.5% YTD, and SME, plus 70.8% YTD. The key growth driver for the retail segment was mortgages, plus 33% YTD. Meanwhile, corporate loan decreased 4.1% in 6 months 2022. 2022 outlook Increase in LDR to cushion impact of cut in credit growth forecast. Figure 2, BCSC's 2022 forecast. Net interest income. BCSC comments. We cut our forecast for NII by 2.8% relative to our previous report following. Firstly, a 7 PB cut in 2022 forward NIM, and secondly, downward division in our assumption for credit growth from 22.8% to 17.7%, which is partly offset by increase in regulated LDR from 77% to 79.8%. The cut in our credit growth assumption was mainly driven by the 27.6% cut in the corporate bond balance. Meanwhile, we maintain our 2022 forward loan growth at 23%. The large corporate bond balance actually gives Techcombank flexibility amidst its tight initial credit quota, as bank participating in the State Bank of Vietnam's rescue of zero-loan banks could receive a higher credit quota. We believe the credit quota of the remaining banks could be lower in order to control system-wide credit growth at a reasonable level. Net fee income. We cut 2022 forward pure NFI by 2.9% mainly because of 1. A 30% cut in fees from the underwriting business, given the breakdown in the corporate bond market, and 2. An 18.4% decrease in fees from securities brokerage services from lower than expected market turnover. We decrease our projection for 2022 forward gains from FX trading from 162 billion Vietnam dong to 69 billion Vietnam dong due to lower than expected H1 2022 results. Total NOII. We assume Techcombank will reserve provisions for devaluations for government bonds in H2 2022. OPEX. We maintain our assumption for 2022 forward CIR at 31.5%. Provision expenses. We lower our forecast for 2022 forward provision expenses by 23.9% following a downward revision, and provision expenses booked to immediately write off in the year. We lower our 2022 forward write-off rates growth load from 0.3% to 0.15%. IEA yield. We cut our IEA yield by 1 PB as a result of the decrease in high-yielding corporate bond that was partly offset by the shift from corporate loans toward retail lending. Cost of funds. We raised 2022 forward COF by 9 PBS following Techcombank's actions to increase deposit rates in June 2022 by 100 BPS for tenors of 6 months and above, which was higher than our previous expectation. We believe significant increase in deposit rates that Techcombank was not due to liquidity pressure, but more to maintain its competitive advantage over peers, given that prior to June, Techcombank offered deposit rates that were even lower than those at SOE banks. CASA ratio. We cut our forecast for the 2022 forward CASA ratio by 2 PPTs as that we believe that the State Bank of Vietnam will be strict in giving our credit quota top-ups to this year in order to manage inflation. In addition, we're rising interest rate environment could make it more difficult for banks to increase their CASA ratio. Gross loans. We believe the SME and retail segments will be the key drivers for loan growth this year, especially mortgages. Total equity. We model for an ESOP of 6.3 million shares, equivalent to 0.18% of outstanding shares, at a price of 10,000 Vietnam dong per share, with a 1-year lock-up period. ROAE. We assume no dividend to be paid for 2021 in 2022. More offshore syndicated loans to maintain loans COF advantage compared to peers and reduce pressure to modelize deposits. On June 20, 2022, Techcombank announced that it successfully raised $1 billion in offshore syndicated loans, representing a record from a single transaction for this type of borrowing. This is the third time that Techcombank has utilized offshore syndicated loans after raising $500 million in 2020 and $800 million in 2021. The loans are made up of 3 tranches with tenors of 3, 4, and 5 years. There is an interest rate margin of 140 PPS PA on the 3 years tranches, 155 PPS PA on the 4-year tranches, and 170 PPS PA on the 5-year tranches. Over the SOFR, the new benchmark rate in lieu of LIBOR. Standard Chartered Bank and United Overseas Bank Limited, which initially underwrote the financing, were joined by fellow managed lead arranger banks and underwriters, Australia and New Zealand Banking Group Limited, Hong Kong and Shanghai Banking Corporations Limited, and Sumitomo Mitsui Banking Corporation. The new syndicated offshore loans reform reinforce our view that Techcombank is well positioned to maintain the lowest COF in our coverage universe, which would thus support Techcombank to become more competitive in loan offerings. Additionally, a draft regulation on conditions for corporates to approach offshore loans that are not guaranteed by the government has a provision that impose a borrowing limits applicable to banks. However, we believe such limitations will face industry resistance. All eyes are on the supplement and amendment to Decree 153. Recently, a new draft to amend and supplement Decree 153, which regulates the private placement and trading of privately placed corporate bonds in the domestic market and offering of corporate bonds in the international market, was recently issued on July 2022, refers to hereafter as the new draft, compares to the draft that we assessed by May 2022, referred hereafter as the old draft. This new draft has eased some of the provisions for bonds issuers. Below are some key highlights. Highlight 1. Old draft. Enterprise may not issue bonds for investment in the form of capital contribution, purchase of shares, purchase of contributed capital, purchase of bonds of other enterprise, or loans to other enterprise. New draft clause deleted. Our interpretation, the new draft allows companies to issue bonds to increase capital at their subsidiaries. Highlight 2. Old draft, NA. New draft. Investors cannot sell or contribute capital to jointly invest in bonds with investors that are not professional investors under the regulatory definition of professional investors. Our interpretation. This provision aims to prevent risky investment tools, such as co-investment contracts, as per the case at Vietnamstockmarket Group. Highlight 3. Old draft. Bond insurance purposes include specific information in investment programs and projects, as well as the value of bond debt being restructured. For credit institutions, allowable scope of bonds insurance includes to increase Tier 2 capital or to lend, invest, or use for purposes as prescribed by the law on credit institutions and guiding documents. New draft. The purpose of the bond issuance includes specific information about the investment projects and programs, productions, and business activities requiring additional capital. Restructuring debt need to specify each restructured debt or equity, value of restructured debt or equity, particularly for credit institutions and securities companies. The allowable scope of issuing bonds includes to increase Tier 2 capital or to lend, invest, or use for purposes as prescribed by law. Our interpretation, as there are no specific sectors being specified under production and business activities, our interpretation is the new draft allows companies to issue bonds to raise working capital. Highlight 4. Old draft and a new draft. Supplement the provision for bond buyback prior to maturity. Cases of bond buyback prior to maturity include A. Buyback prior to maturity according to the agreement between the issuer and the bondholder. Compulsory buyback at the request of investor when the issuer violates the law under the decisions of the government authority and when the breach cannot be remedied or the remedy is not approved by bondholders who present 65% of the total number of bonds issued. The issuer violates the bond issuance plan, but the offense cannot be remedied, or the remedy is not approved by bondholders who present 65% of the total number of bonds issued. Our interpretation, the new draft proposed to protect the bondholder and deter companies from breaching bond commitments. Highlight 5. The law on securities regulates that professional investors are those who 1. Hold securities professional certifications. 2. Hold a quantity of listed or registered securities that is worth at least 2 billion Vietnam dong, as confirmed by the securities company, and 3. Have taxable income in latest year of at least 1 billion Vietnam dong, according to his or her submitted tax return or tax deduction documents or of his or her income payer. Old draft. The old draft requires retail investors to maintain a list of listed and registered securities held, including securities from escrow accounts and forward contracts, with a minimum value specified in the law on securities for at least 2 consecutive years before making a transaction. New draft. The new draft defines the value of listed and registered securities held by retail professional investors under the law on securities is determined by the average daily market value of the securities portfolio for at least 6 consecutive months prior to the date of determinations of professional securities investor status, excluding margin loans and the valuations of securities under repurchase contracts. Our interpretation loosens requirements for retail investors to be defined as professional investor. Highlight 6. Overdraft. Supplement conditions for a company to be qualified to issue bonds. A company must satisfy financial safety ratios and prudential ratios operations as prescribed by law, including the total outstanding bonds from all forms of bond borrowing at the time of issuance, including the expected issuance volume, must not exceed 3 times of the equity according to the last date. Quarterly financial statements having profits on a year preceding the year of issuance and not accumulated loss according to the audited financial statements. Enterprise with total outstanding bonds at the time of issuance, including expected issuance volume, greater than 1 time of equity alone according to the latest quarterly financial statements when issuing bonds must have collateral or payment guarantee. Certified financial adequacy ratio applicable to enterprises in which 100% of share capital is held by the state, in addition to financial adequacy ratios in specialized fields. New draft clause deleted. Our interpretation loosen requirement for companies to be qualified to issue bonds. We believe the draft supplement and amendment to Decree 153 may be revised further before the final version is presented for approval by the Prime Minister. Our current assumption and expectation is for the final version to be promulgated by the end of this year. As a result, we believe that Techcombank's underwriting business could remain stagnant in H2 2022 as in Q2 2022. We therefore lower our forecast for 2022 forward. Income from the underwriting business by 20% to 860 billion Vietnam dong for our 2023 to 2024 forward forecast for income from the underwriting business. We assume slow growth of 5% to 10% as we believe that stricter rules for the bond markets are necessary for the long-term development of this channel, even through even though we could cause a negative short-term impacts on the supply side. Due to lingering market concerns on the negative impact of defaults in corporate bonds and or real estate loans, if any, to Techcombank, we run a sensitivity analysis to estimate the potential impact of loss from the corporate bond markets and loss on loans to Recon. As of Q2 2022, loans to Recon accounted for 32.4% of Techcombank's total loan book. On our target price, our assumption for the lending rates for three bonds and loans is 10%. We note that this is a simple analysis. In reality, when we move down the axis, the collateral backing most loans at Techcombank would also be negatively impacted. But this second order impact is not simulated in table below. Our base case for Techcombank is for the corporate bond and Recon loans to maintain its current status. Year 3, sensitivity of loss from corporate bond and loss on Recon loans to target price, assuming no recovery of rising of debts. Restructured loans decreased in Q2 2022. Techcombank's restructured loans balance decreased 68.8% Q-o-Q to 0.5 trillion Vietnam dong in Q2 2022. On a relative basis, to gross loans, restructured loans experienced a 27 PB Q-o-Q decrease to 0.13% in Q2 2022 from 0.40% in Q1 2022. Q2 2022 restructured loans were the lowest since the first wave of COVID-19 on both an absolute and relative basis. Given the minimal amount of restructured loans in Q2 2022, we foresee no pressure on the 2022 forwards NPL ratio despite Circular 14 not allowing for a new restructuring after June the 30th, 2022. We maintain our assumption for the 2022 forwards NPL ratio at 0.74%. Year 4 restructured loan balance and restructured loans as a percentage of gross loans. Valuation. We utilize two valuation methodologies to reach our estimated target price for mid-2023, including 1. The residual income method with 50% weighting and target VP method with 50% weighting. In this update report, we cut our target price by 8.2% to 64,100 Vietnam dong per share, following 1. a 2.7% aggregate decrease in our projections for 2022 to 2026 forward net profit after tax MI, and two, an increase in our house cost of equity from 12.5% to 13%. The decrease in our net profit after tax MI forecast is mainly driven by one, a 2.8% aggregate decrease in net interest net interest income as we reduce our credit growth as assumption for 2022 while remaining cautious on Techcombank's credit growth in the following years, given that the receivers of the Eurozone banks could experience higher than peer credit growth, and two, an 8.8% aggregate increase in trading and investment income, which is partly offset by a 1.7% aggregate decrease in provision expenses. Year 13 valuation summary. Residual income model. Year 14. Residual income model. Residual income. 2022 forward. 5,063. 2023 forward. 10,609. 2024 forward. 11,073. 2025 forward. 11,155. 2026 forward. 9,958. Year 15, cost of equity. We maintain our assumptions for an intermediate growth rate for 10 years after the explicit forecast at 8%, which equals our assumption for VCB. In addition, we maintain our assumption for a perpetual growth rate at 3%. Currently, there are several events that could have a short-term impact on Techcombank's growth outlook, as presented on page 4 and 6. However, we believe in long-term strategy of Techcombank, and we view Techcombank's well-capitalized equity buffers to offer capabilities to capture growth opportunities over the long run. Techcombank has successfully lifted its CASA ratio from 24% as of YE 2017 to 47.5% as of Q2 2022. The highest level in Vietnam's banking industry, together with the increased use of international syndicated loans to optimize its funding cost. We believe Techcombank's ROA will remain the highest in the industry for the foreseeable future. Target VP. Techcombank is trading at a slight discount of 10.4% relative to the peer median 2022 forwards PB of 1.34 times. Our observation suggests that Techcombank has traded at a discount of 5.8% to the peer median trailing PB over the past 12 months. Techcombank's valuation gap with peers has widened since the beginning of the year, which we believe is partly because of concerns surrounding the risks from corporate bonds and loans to the real estate sector. However, we believe Techcombank should trade at a premium relative to the peer group for the following seasons. Techcombank CASA is now at the top of the industry and is driven largely by the retail segment. However, the bank still targets for an increase in its CASA ratio to 55% by 2025, which could help the bank to continue outperform its peers on the liabilities side and thereby improve its ROE. Syndicated loans of $500 million, $800 million, and $1 billion raised by Techcombank in 2020, 2021, and 2022 respectively. We also have the bank to deliver competitive COF in the sector. Techcombank has consistently delivered strong performances since 2013, with a net income compound annual growth rate in 2013 to 2021 of 52%. Techcombank had a strong relationship with Winroot and strategic partnership with Mason, the latter of which has a 15% stake in Techcombank. As a result, the bank has advantages to leverage the customer bases of these two companies. Techcombank is operating under well-capitalized conditions with low financial leverage of 6 times as of Q2 2022 compares to the median level at 11 times. Even so, Techcombank's TTM ROE was 21.8% against the domestic peer median of 22.4% as of Q2 2022. We believe Techcombank's business could provide about 18% ROE over the next 5 years. Techcombank has a strong positive in the corporate bond business as well as the local stock markets, which is supported by its securities company Techcom Securities. TCBS has a leading market share in terms of corporate bond coverage on Ho Chi Minh Stock Exchange, 38.87% as of 2021, and ranks in 6th place for market share in terms of stock brokerage on Ho Chi Minh Stock Exchange, 4.57% as of 2021. We believe there could be a slowdown in corporate bonds issued in the next 2 years. However, in the long run, we believe corporate bonds will remain to be an important capital raising channel for companies in Vietnam. In this update report, we lower our target PB for Techcombank from 1.95 times to 1.84 times to reflect a 50 PB increase in our in-house cost of equity. We remain comfortable to set a higher target BP for Techcombank relative to peers, as we believe that the current actions of the government will support long-term sustainable growth for both the real estate sector and bond market, which could be beneficial to Techcombank in the long run, giving its synergies. Moreover, any negative impacts shall remain short-term impacts solely. Year 16, Bloomberg consensus forecast for Vietnam banks. Year 7. The above sensitivity chart metrics illustrates a fair value PB multiple for Techcombanks at 1.68 times using the Gordon Growth Model (GGM), with our average ROE in 2016 to 2026 forward at 19.8%, cost of equity at 13%, and terminal growth assumption of 3%. The PB multiple derived from the GGM is 9% lower than our 2022 forward target PB multiple of 1.84 times, because our projected ROEs reflect the negative impact of low leverage. Despite a large retained earnings base, Techcombank is currently not enthusiastic about paying a cash dividend. Potential downside risks to our positive bill. Techcombank may fail to meet our earnings and profitability forecasts, either due to its failure to execute on its business model and or failure to receive credit order as high as our expectation, and or risks arising from their corporate bonds. Year 18, Vietnam Bank's VP and ROE. History of recommendations. Figure 19, historical VCSC target price compares to share price. Financial statements. Net interest income 2021, 26,699. 2022 forward 32,806. 2023 forward 39,307. 2024 forward 46,227. Profitability ratios, roads, assets quality, ROE decompositions. Yeah, and that's all. These are all about informations we want to share with you. Hope this will be useful for you. Thanks for listening and follow our channel. Have a good day and see you next time. Bye.